All right, hello everybody. Thanks for tuning in to our daily slash 5 or 6 times a week preview on the market. Now, it's going to be an interesting week. And the reason why I say that is because there's a lot of significant support, significant resistance overhead in a bunch of the sectors. Now, if you're looking at SPY, which is the S&P 500 ETF, which is very heavily traded, you're going to do much better if you understand that this is a combination of 11 different sectors. So we're going to go through the sectors that are important this week, and it's going to help us kind of get a view or an opinion or a feel as to where this SPY might go. Now, I will tell you this. There's a lot of resistance overhead in a lot of the sectors, which means the path of least resistance is probably to the downside. I mean, we don't obviously know for sure. We always want to let the market tell us what to do. But if we don't get through the resistance that we're at, there's a really good chance that we're going to make a tradable move lower. So here's SPY, which is the Spider ETF, which is an ETF that follows the S&P 500. And we can see we're at resistance. What is resistance? Resistance is a large group of investors who are looking to sell at or close to the same price. Look at this. Look how precise this is. And there's no way a fundamental analyst or someone on Fox Business News or CNBC could ever get this precise because they don't understand how this stuff works. So back here this is probably late January, early February, we got to 416 and went lower. Same thing happened here, and now we're right back up to that 416 level. Resistance is a large group of investors who want to sell. When we're moving higher in a market, there's not enough supply or sell orders to fill all of the demand or buy orders. Therefore, the buyers need to be willing to pay premiums to get their shares in or to get a seller to come off the sidelines and be enticed. When we get to a resistance level, there's more supply than demand. So the buyers can buy all they want. The sellers are going to overpower the buyers, or there's going to be enough or more than enough orders to sell to fill all the buy orders. Now, a lot of times when we get to resistance, we get these sell-offs afterwards, like we did here. We did here. You can see we got to resistance here, and we sold off here. This is a level that goes back, but resistance here, we sell off here. Why does this happen? Well, there are investors who want to sell, okay? They're watching the prices and they're watching them go higher and higher and higher. All of a sudden the prices stop going higher. What is that probably a sign of? Well, it's probably a sign that there's other investors entering the market who want to sell. That's why the price is not going higher anymore. That's why the buyers don't need to pay premiums anymore. So some of these investors start to kind of get freaked out and start to think, gee, I want to sell, but if there's other sellers entering the market here, I probably should reduce my price because the buyers are going to go to who's ever willing to sell it at the lowest price. If they're not going to come to you if you want to sell at 416 and there's someone else who's willing to sell at 415. So they get anxious or afraid or whatever you want to call it, and it causes this snowball effect because they all start undercutting each other's prices. Happened here, it happened here, happened back here. 98% of the moves in a stock market or any financial market, whether it's cryptos or whatever it is that you trade, are due to psychology. They're not due to what you may think or what the pundits are all talking about. Oh, the market's up on this, market's up down on that. The vast majority of the time when the market moves, it's because of just psychology like this, right? Why did we get a sell off here? Well, psychology. Sellers are getting anxious. They start undercutting each other. Why do we get a bounce off of support? Well, buyers are getting anxious. Now the buyers are thinking, oh, I better raise my price or I'm going to miss this because the sellers are going to go to who's ever willing to pay the highest price. So if I really want to buy these shares, I better step up and pay a higher price. So when a market's going down, there's not enough demand to take in all of the supply. But when we get to a support level, there is enough demand and things start to turn around. And some of those investors start to get anxious and they put things into this snowball effect because they're all trying to bid higher prices than each other. So we get to resistance. There's a good chance we sell off because we get anxious sellers. We get to support, there's a good chance we rally because there's anxious buyers. Now you can see another principle here. Notice how the level that was resistance converted into support, then it became resistance again, and then it became support. Now, how does this happen? Investor psychology. There are investors who sold here who thought they did the right thing when the market went lower. But once the price goes higher, there's a number of these investors who said to say to themselves, man, I made a mistake. I shouldn't have sold. I want to buy my shares back, but I'm only going to do so if I can get them for the same price I sold them at. So if you have enough remorseful sellers placing buy orders at the level that was resistance, it turns into support. Support becomes resistance. This is the opposite. You have people who bought here who regret doing so when the price went lower, and a number of them tell themselves, hey, I made a mistake. I want to get out, but I'm only going to do it if I can get out of break even. So if we have enough remorseful buyers placing sell orders at the level that was support, support can turn into resistance. So remember, seller's remorse can turn resistance into support. Buyer's remorse can turn support into resistance. This happens all the time in pretty much every stock or commodity or crypto that you're thinking about. And this is one of the things that experienced institutional traders look at. It's about where are the price levels. You're not supposed to guess. Well, I mean, I guess you can guess if you want to, but how has that worked out for you so far? If you let the market tell you what to do, you're going to have much greater odds of being successful. So if we don't get through this resistance over the next few days around 416, there's probably a really good chance we get another move lower because the sellers who want to sell are going to get anxious. So if we don't get through 416, that's the market's way of saying, hey, man, I'm about to go lower, or there's a really good chance I'm about to go lower. So now, why would there be resistance at a level that was resistance? Guess what? Drum roll, market psychology. There are people who bought here who regretted doing so when the price went lower. They tell themselves, man, if it ever gets back up to this level, I am going to get out of break even. So we have remorseful buyers placing sell orders at the level that was resistance. All right, look at this chart. Notice how some price levels are more important than others. This is an important level, obviously, 416, where we are now. This is an important level, 408. I don't know. Why is 405 not an important level? I mean, I don't know, but we don't really need to know. So anyway, just remember the S&P is the sum of its parts. There's 11 different sectors. So let's look at some of these sectors. And what I'm going to show you is that there's a lot of resistance just overhead in a lot of these sectors. As a matter of fact, more than half the market in terms of market weighting is at resistance. So if you're a put buyer, or an options trader, get on, just these are what you need to pay attention to because this is how the market is going to talk to you. So let's move to our technology sector. Where did we stall out? Oh, gee, 150.83. Oh, gee, where did I have my resistance level? 151. I mean, I don't want to sound obnoxious, but there's not too many people that can predict or identify these levels as well as someone like me can, because there's very few people that have had the experience and the experience in the studying that I've had. But my experience and time spent could help you make money. So hopefully that's why you're listening to me right now. So resistance became resistance, and we're right at that resistance. It's not 149, it's not 148, it's not 153, it's right around 151. So the level that was resistance in August was resistance in, I guess that's late March, and now it's resistance again at end of April and early May. And just to point out here, we can see resistance become support. That's our seller's remorse. You can see here resistance was resistance again. This is about 28% of the market in terms of weighting. So right here, more than a quarter of the market is at resistance. Healthcare is the second biggest sector. It's about 15%. So it is at resistance too. This 133.50 level is important for a year now. It was resistance back here last February, became resistance here, resistance, became support, became resistance, became support. Now we're right back up to that resistance. So we have the two biggest sectors in the market kind of slamming into resistance. So there's a good chance that this could put a top on it. Now, if we break this resistance, meaning we trade higher, and we hold for a couple of days, that's going to tell us something. It's going to tell us that the investors who created the resistance with their sell orders are out of the way. They're out of the market. They either canceled or finished their orders or changed their minds. But anytime you take supply out of a market or sellers out of a market, it sets the stage for the buyers, the demand side, to have to pay higher prices, and that can force the uptrend. And we can see here resistance was resistance, support around 120 was support. Why is it 120 and not 124 or 122 or 128? I mean, I don't know. Well, well, I mean, 128 was, well, actually it wasn't. It was a little below it. It's probably about 127.50. So if you know where these price levels are, it's like your map to prosperity in a lot of ways. I mean, there's a lot more to it than that. It's, check out our psychology lessons because that's really what it comes down to. But what are we looking at? Psychology, right? Psychology turns resistance into support. Psychology turns support into resistance. Psychology keeps resistance intact. Psychology keeps support intact. Now, why would there be support at a former support level? Well, we have short sellers who sold, who tell themselves, man, I made a mistake. I'm going to buy my shares back if they get to where I shorted them so I can get out at break even. So if you have enough of these remorseful short sellers placing buy orders at the level that was support, well, it's going to become support. And we can see that here, all right? So, I mean, I'm not kidding, man. I'm not just saying this stuff for the hell of it, right? I'm telling you, this is what is the secret to being a profitable trader. Understanding the price levels, understanding the trends, understanding the momentum, and understanding the psychology. Forget about things like Fibonacci retracements or Elliott wave or, I think Gann theory is probably the most ridiculous of them all. No one in the institutional world that I spent more than 2 decades in uses that stuff. It just doesn't even exist. I never even kind of heard of it until I got into the teaching the retail traders because people ask me about it. And what I say is, hey, man, you want science fiction? Go watch Star Trek. You want to make money? Figure out where these important price levels are. Okay, so now here we have our financial sector. Very clear. Support became resistance because we have buyers trying to get out at break even. You don't need to be a market guru to see this. You don't need to be a former hedge fund trader to see this. It's pretty darn obvious. Now we have all this news with the banks, and it's really just ridiculous how incompetent are basically all sectors of our administration are. It's really just astonishing. And now the news is out that Anthony Blinken lied to the Senate, so he's probably going to have to step down. So it's all going to coming down like a house of cards. But let's just focus on the incompetence in the Treasury Department. Like, what the hell are they doing with First Republic Bank? First, they were going to back it, then they weren't, then they were going to bail it out. The thing just keeps going lower and lower, and now this weekend they're talking about it again. A lot of these other banks are going lower. I think we're going to have some problems in the market short term. My take is definitely bearish because when we're slamming into all this resistance, we know there's a lot of sellers around. There's probably more sellers than there are buyers, or more shares to be sold at least than there are shares to be bought. So, but if we break the resistance, it tells us that the sellers are out of the way. And hey, I've been wrong many times in my life, and the market is never wrong. So if we simultaneously get ahead of all this resistance or above it, that's going to tell me that the market could be setting up for another decent move higher. But I don't think it's going to happen. I think we're going to move lower. But make sure you check back with Stock Market Jobber because the best traders don't have opinions. They're agnostic and they let the market tell them what to do. If you come in every day thinking, oh, the market's going to go down, the market's going to go down, the market's going to go down, guess what? You're going to be subject to confirmation bias. You're going to maybe not pay enough attention to things that contradict your opinion that you should be paying attention to. So the best traders that are trading just day trading or just trading with firms' money, trying to make short-term profits, they are agnostic. They let the market tell them what to do. They try. I mean, of course, they're human beings, so they're going to have opinions. But the people that are the less opinionated are the ones that tend to do better. Look at this communication services sector. Okay, Resistance, resistance. Once again, where are we? 59.90. I had this level here at 60 going back to, I don't know, September. And when we rallied, where do we find resistance? Right there, right there. This is why a lot of the members of the community are learning to make money, because they understand how important it is to have these levels in mind. Theoretically, you could have bought it at 50 and say, all right, well, if it gets to 65, I'm going to sell it. Well, that's just a guess. If you looked at the market and let the market tell you what to do, the market would tell you, gee, there's a really good chance this thing reverses at 60. There's a lot of resistance there, at least there has been for going back a year. Here we have our support becoming resistance because of buyer's remorse. Resistance becomes support because of seller's remorse. Don't underestimate how simple it seems to just know where these important price levels are. First of all, it defies a lot of what we're taught in financial theory, right? Or whatever. Oh, random walk. The market just goes on a random walk. Give me a break, man. If the market went on a random walk, every price level would have the same amount of importance. Oh, the market moves because of fundamentals. Oh, here's what's going on with COVID. Here's what's going on with Ukraine. Here's what's going on with this. Here's what's going on with that. No. Okay. The market moves because of psychology 98% of the time. We get up to resistance, sellers start undercutting each other. We get to support, buyers start overpaying each other. We get to resistance, sellers start undercutting each other. Okay. Now here we broke the support, which told us that the buyers who created it are out of the way, and we get a big move lower. Get back up to resistance, sellers undercut each other. Here, sellers undercut each other. Finally, we get through it and we make a big move higher. Well, why is that? Well, when you break resistance, you know that the sellers who created it, or the investors who created it with their sell orders, are out of the way. So resistance, sell off, get to support, move higher. So here's another level that is another sector that's at clear resistance. So here are the 11 sectors that make up the S&P 500. And if you trade SPY, you should really pay attention to what's going on here. Now, real estate and materials and utilities, they're so small that they don't really have a big effect on the broader markets. Energy is small too, but it's got more importance than you would think just based on the weighting, because energy affects every industry there is. Consumer staples, communication services. So we had information technology, which is tech, say it's 26%. We have healthcare, 14%. So that's 40% of the market. We have financials, 13%. So now we're at 53% of the market. And we have communication services at 8.3%. So that's 60%. 60% of the market is at well-defined, looks like important resistance. That's what I'm going to be watching. Once again, I'm going to let the market tell me what to do. But if we don't get through these resistance levels over the next few days, there's a good chance the sellers who are at that resistance start to freak out and start to undercut each other. And that's going to push the price lower. And that's going to drive SPY lower. All right. Thank you, everybody. Thanks for checking us out. And I will talk to you soon.